Do you know there's an invisible member in your family who can legally help you save lakhs in tax every year? Hi, I'm Shalini Kohli, and I help individuals and families structure their money in a smarter way. If you are someone who wants to save tax and build long term wealth, you are in the right place. Do consider subscribing. I share practical financial insights here regularly. So, today, let me introduce you to this powerful financial identity HUF, Hindu Undivided Family. Most families already have it but never use it. Now, think of this in a simpler manner. HUF is not a very new concept. It's actually one of the oldest financial structures in India recognized by law. In simple words, your family becomes a separate financial entity. Yes, one family and multiple taxpayers. You as an individual, your wife, and HUF as a separate entity, which means two PAN cards, two tax slabs, two opportunities, and to save tax, one you and one your HUF. Who are the members in this? Now let's understand who forms an HUF. At the center is the Karta, usually the senior most male or female member. Then comes the co-partners. These are your children by birth, and then members, which include spouse, daughter-in-laws, and grandchildren. The most important part, an HUF is automatically created in a Hindu family, but it becomes active only when formalized. And now the big question, how do you actually open an HUF account? Let me break this into simple steps. Step number one, create an HUF deed. This is a legal document declaring the formation of your HUF with details of members and karta. Step number two, apply for PAN card of HUF. Since HUF is a separate entity, it needs its own PAN card. Step number three, open up a bank account in HUF name. Once PAN is ready, open a dedicated bank account. This is where your HUF transactions will happen. Step number four, introduce initial corpus. You can start with a small amount of ancestral funds. Important rule, which is very, very critical. This is where most of the people make mistakes. You cannot transfer your personal earned income directly into HUF. That will attract clubbing provisions and defeat the purpose. Instead, HUF should ideally be funded through ancestral property, gifts received by HUF, income generated within HUF. Now comes the powerful part. What can HUF do? Invest in mutual funds, invest in fixed deposits, buy property, even take insurance policies. Yes, even insurances can be structured under HUF to create a long term tax efficient wealth and protection strategies. So now imagine this. Instead of all income getting taxed in your personal name, you are distributing income across two entities. Result. What would be the result in this case? Lower tax liability, better wealth structuring, family based financial planning. For smart families, HUF is not just tax saving, it becomes a foundation for legacy planning, asset protection, structured wealth creation. In many ways, it works like a basic family tax structure, but simpler and legally recognized. So, if you are someone who's earning well and not using HUF, you're probably paying more tax than required, and more importantly, missing out on a powerful way of to structure your family's wealth. If you want to understand how HUF can fit into your personal financial plan, connect with me, because smart families don't just earn money, they structure it wisely.